In this video, we're going to talk about the top 10 dividend stocks to buy and hold forever. Before starting, please do like the video and subscribe to this channel for future updates. If you're not prepared to be able to keep a close eye on these equities, you risk losing money if the market turns against you, or even worse, if the once succulent dividend is cut back or canceled. Look to reliable firms with rock-solid business strategies that will endure the test of time and continue to pay dividends for many decades to come for a less showy but also lower risk method of investing. It can be challenging to predict even several decades into the future when it comes to investment. After all, none of the recent 3 years events, including the pandemic, double-digit inflation, and protracted war in Ukraine, were predicted. As a result, long-term investors must put stability and durability above practically anything else. A company's ability to pay dividends require a consistent flow of cash, making them a key indicator of stability. Now, if the company is dedicated to increasing its dividends over time, there's also a strategy to boost your returns over the long term. Here are 10 dividend stocks to buy and hold forever. Number 10, Verizon Communications Incorporated. Everyone's familiar with telecom giant Verizon, the top U.S. wireless provider with around 150 million retail connections, a number much higher than the 110 million connections held by T-Mobile USA, which is ranked second, TMUS. Due to the importance of mobile communication and the stickiness of its customers, a steady stream of income is guaranteed for many years to come. Furthermore, Verizon is anticipated to have fiscal 2023 earnings per share of $4.71 compared to its current dividend payout per share of $2.61. Payouts are not only sustainable but also primed for future rises because that represents only roughly 55% of overall revenues. VZ is a particularly appealing investment for long-term buy and hold investors, especially given the yield's already excellent level. Number 9, Johnson & Johnson. When it comes to reasons why you should buy and hold Johnson & Johnson, J&J stock forever, the company has a strong track record. It is one of the top 10 Wall Street stocks and one of just 2 American companies with a top AAA credit rating, the other being Microsoft MSFT. But more significantly for income investors, it has consistently increased its dividend for a remarkable 60 years. This firm has a strong hold on the consumer health sector, which includes high-margin pharmaceuticals and medical equipment, along with Tylenol and Band-Aid goods. And given that people will likely get old and get sick at some point in their lives, J&J is a rock-solid investment to believe in, regardless of the ups and downs of the global economy. Number 8, Prologis Incorporated. Prologis is actually the biggest publicly traded real estate company on U.S. markets, despite arguably not having the same name recognition as the other corporations on this list. Due to its size, it has unparalleled stability that few other businesses in any industry can match. The operation of big warehouses, industrial properties, and logistics hubs, as opposed to the whims of unpredictable housing or commercial real estate trends, is what actually distinguishes PLD as a stock you can purchase and own forever. In total, it leases 1.2 billion square feet of space to roughly 6,600 clients in 20 different countries. There is no doubt that Prologis will be around in the long term for businesses searching for space in the future, despite the fact that the global economy will undoubtedly have ups and downs. Number 7, Microsoft Corp. It's difficult to foresee how the technology industry will look in 10 or 100 years. Choosing a stock to hold forever becomes quite difficult as a result. Microsoft appears to be standing, though. Like the aforementioned Johnson & Johnson, it is a $2 trillion powerhouse of unmatched magnitude and one of the few American companies that have a AAA credit rating. Also, as of December 31st, it had an incredible $100 billion in cash on hand. By current yield, the dividend is the least on this list. But 10 years after instituting its first regular dividend at a rate of 23 cents per share in 2013, Microsoft is now paying 68 cents per share, more than double that. There is an incentive to acquire and hold for future dividend increases if you're seeking larger payouts. Number 6, JPMorgan Chase Company. One of the most important participants in the banking industry is JPMorgan. It is unquestionably the kind of dividend company you can purchase and hold for a very long time because of its extensive operations and consistent profitability. When it came to dividend payments, JPM was the first significant financial institution in the U.S. to surpass its pre-crisis levels. In 2008, it was paying $1.52 yearly, but by the end of 2014, it had increased to $1.56 per share. When compared to a stock like Citigroup Incorporated, C, which paid $5.40 each quarter in 2007, this one only pays $2.04 annually. Since its founding more than 220 years ago, this megabank has survived numerous crises and is currently the largest bank in the United States by assets. That kind of history ought to inspire confidence in the future for long-term investors. Number 5, American Electric Power Company Incorporated. American Electric Power, AEP, a Midwestern electric utility with its corporate headquarters in Columbus, Ohio, has been providing electricity to the area for more than a century. It presently has over 5.5 million subscribers and one of the 5 largest publicly traded utility firms on Wall Street, with a market value of nearly $48 billion. Few industries are more dependable than utilities because of the high baseline demand for these resources, which are as essential to modern life as food and water. AEP just recorded its 450th consecutive dividend in October, a remarkable accomplishment that means it has paid shareholders every single quarter since 1910. There's a very good possibility that AEP will still be around paying dividends and shareholders, even though it's difficult to envision what the world will look like in another 110 years. Number 4, Consolidated Edison Incorporated. Consolidated Edison is a very small company compared to the largest names in the utility industry, although being no means a small fry. Nevertheless, a long-term dividend stock is more than just its size, consistency, and a secure position in the highly desirable regional markets surrounding metropolitan New York City are what Con Ed delivers. Like food and housing, electricity is a necessity. Thus, there will always be a steady stream of demand. In addition, there's little competition among the majority of American electrical providers, which are regional monopolies. With its 3.5 million consumers in the New York City region and natural gas connections servicing 1.1 million more, this is what makes ED stock so appealing to income investors. Although a lot could occur in the next years, since Con Ed has increased its dividend for approximately 50 years running, it appears likely that this dividend stock will continue to pay out money to investors. Number 3, Procter & Gamble Company. The company Procter & Gamble, PG, is responsible for some of the most recognizable consumer brands in the world, including Pampers diapers, Crest toothpaste, and Gillette shaving tools. You probably have P&G items in your medicine cabinet or dresser drawer, and chances are good that you'll continue to stock up on those tried and true brands the next time you go shopping. In the roughly 65 years that Procter & Gamble has been in business, it has boosted its payouts at least once a year. Consumer staples distribution is not a flashy or high-growth industry, but it is unquestionably dependable for portfolio owners who take a very long view. Number 2, AbbVie Incorporated. AbbVie, ABBV, which was separated from its parent company, Abbott Laboratories, ABT, in 2013, took over branded biopharmaceutical goods in order to carve out a niche for itself away from the staid and lower-margin sector of medical equipment and consumer health products. After that, ABBV more than tripled to outpace the rest of ABT's operations. The company's Freestyle Libre glucose monitor for those with type 2 diabetes, which is expected to reach $4 billion in sales this year, is just one example of how hard AbbVie has fought to keep its product pipeline full with lucrative medicines. A number of trade journalists forecast that ABBV would surpass all rivals to become the largest pharmaceutical business in the following 5 years due to a positive outlook. With unparalleled scale and recession-proof medicine sales, it's difficult to envision a future without AbbVie. Number 1, Coca-Cola Company. Coca-Cola is the stock to own if there ever was one, with more than 120 years of operating history, operations in 200 different countries, and an impressive track record of 61 consecutive years of dividend growth. This consumer staple stock is a worldwide behemoth. Yes, the popularity of sugary soft drinks has declined in the United States, but Coke products still have enormous development potential abroad and tremendous baseline demand in Western nations. The product selection up here includes brands like Vitamin Water, Fuse Teas, Powerade sports drinks, and Minute Maid juices, among others, and there's much more than simply Coca-Cola to drink. The fact that Warren Buffett's Berkshire Hathaway, BRK.A, BRK.B, owns more than 9% of the stock serves as evidence of the firm's long-term income potential. This creates significant institutional buying pressure to support shares and significant pressure to maintain steady dividend payments in the future. So, what do you think about our video? Let us know in the comment box below, and please like this video and subscribe to the channel for future updates.